Welcome, welcome to our 2 o'clock live. Welcome. It's 2 o'clock live. I don't know if I'm gonna stick with that song. It seems to kind of stick in my mind, but I don't know if I'm in love with it just yet. 2 o'clock live is our song. We're here for our afternoon, our 2 o'clock live with Educator to Trader. Going to talk about what the market has to offer today, what it has given us on this here CPI day, because there's CPI stuff that came out this morning. We're gonna look and see. Hey Ash, hey Alicia, I almost called you Ashley. We're gonna see what the market has to offer from today because of this CPI data. I believe the CPI data was something that must have gone well because from what I could see, the market seemed to like it. But I've not been on the market earlier today. So let me take a look. We're at 447.51. So I would say yes, because we closed yesterday at 444. So I would venture to say that yes, the market has done really well after the CPI data. As sellers, we get the option to wait till later in the day. As sellers, we don't have to jump up. Looks like there was a big gap up this morning and a move around. But as sellers, we don't have to jump in. We don't have to jump in. Hey, Bull. Hey, Moriamo. And hey, R. Salankan. Hey, AR Salankan. Hey, y'all on Instagram over there. Welcome. If you want to be able to see my screen, though, you're probably going to want to go to the YouTube channel. And I'm going to grab this here so I can bring it a little closer and typing in the YouTube channel. That way you can be able to see me, see what I show on the screen. All right. If that ain't where you want to go, it's fine. You can continue to listen to me here, but I will show the screen later because I want to show, I'm going to show how do we figure in our profits and losses. People don't necessarily, people don't necessarily know how to find out how much money they made. They know how to see the money when it's, basically to see it, but they don't know how to see the money along the way. I want to make sure that we can do that. So 2 o'clock live, I'm Arlissa, Educator to Trader, here every market trading afternoon at 2 o'clock. Seeing if we want to continue this task. If we keep having, good participation, we'll continue the 2 o'clock lives, just to see how folks want to engage with our community. See how the people want to engage with our community. So welcome. I was saying that the market did, let me see if I can share my screen really quick so that way we can see so we can see what the market did. There we go. I'm presenting. There's too many steps. I think I need to always have it to remember this step every time. There we go. Now I always go through this. I need to make sure that when I do this, I move this to where I can see. There we go. So I can see that I can see that I can see. Hey, let me see who's up here in the comments. Oh, looks like I had a hello. Hey, Miss Deborah. How you doing? All righty. So this is the market I see today. This is on XSP, which is the mini of the SPX. If we switch over to SPX, we should still be able to see what happened over there, but the chart should look very similar to what you see here. We had a big gap up this morning, and the price has seemed to hang out up there in that area. This is today's price action. This is a 15-minute chart, so every candle is 15 minutes of data, but we had a big gap up here between close yesterday and open today. The price came back down into that gap just a taste, and then it ran on back up some more. So this is what we've kind of traded in a channel today. The gap up was the biggest thing, but when you're working with gaps, you need to be mindful that the price will try to go back into the gap because, just like nature abhors a vacuum, so does the stock market. Nobody wants to have gaps. The market will try to come here, but you'll have, bears and bulls who will try to keep it high. The bulls will try to keep it up. The bears will try to bring it down. It's a constant battle, constant tug of war, constant tug of war. All right, so that's what the market has done today. We'll come back at the end of this video. I want to come back again to look at XSP to see if there's potentially a trade. Oh, hey there, Chris, you made it. Yeah, good evening. Chris from the UK. So he's hanging out with us this afternoon. Finally got our time in together. Welcome, welcome, welcome. I want to show you what the prices look like when we're dealing with finding our profit and loss. Now, when depending on what kind of trade you're doing, you'll be able to see what's going on here, right? This is all, my simulated account. I took a picture of it so I can add some graphics and stuff, trying to be fancy. Y'all see me being fancy on here? If you are on Instagram, you got to come over to YouTube so you can see the pictures. Either find me on YouTube or Facebook, because if you're on my Facebook page, Educator2Trader group, or you're on my individual Facebook page, you should still be able to see these graphics. You should be able to see me over there, okay? But if you're buying trades or buying shares or buying options, you're going to be able to see what's going on here. And if you're selling, the difference, you'll be able to see the numbers. The difference is, what do you care about the numbers? If you're buying, you want the number between your trade price and your mark to be going up. But if you're selling, you want it to be going down. This is why it's going to matter what kind of trades you're putting on. So let's look first at this Amazon trade. This Amazon trade is a put credit spread. It's a spread. Remember, we talked yesterday a little bit about spreads. And if you don't know about credit spreads and you want to, you need to go into Educator2Trader.com, and I've got a whole course on credit spreads there, whole training. I do have some YouTube videos that you can watch. Those will give you a very good understanding of credit spreads as well, but you may want to get the comprehensive strategy over on my website so you can make sure that you get it. For me, I like to learn things in a structured order. I can't pull stuff out PC. I want it in boom, 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 but that's the engineer in me. I'm an engineer by degree, so I want things to kind of be woo, 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 woo. I'm kind of a unique engineer though, because I'm also very creative and graphical, which generally is not engineerish, but I'm a unique bird. In case y'all was wondering, I'm a unique bird. So anyway, back to the topic at hand. The Amazon credit spread, this is a put credit spread. So we're working these two things together. When you have a spread, these things they don't stand alone. They work together. So first of all, our trade price, how much you paid or you received, is what's going up here. That's what the trade price, no matter what strategy you're looking at, no matter what kind of trade you're looking at, how much you paid or you received for something is under the trade price. That was the price of the trade, right? I'll give you an example here. If you're looking at this big lots trade, right? I sold a put, and I received $35 as my premium that I took in, because I know as a seller, you take in money. I sold a put, one of them. I took in $35 for this put. It is now worth, the mark column is what is the trade currently worth. The trade is currently worth $2 or 2.5, which the broker rounds it up to 3. It's currently worth $3. Well, as a seller, you do want the money to go from high to low. As a seller, you want your money to decrease because you took in $35. If you're going to buy back, you want to buy it back for less. Notice this next column is the profit or loss percentage. This one says, still looking at this big lots trade, it's saying here that I basically, my profit and loss is a positive 92%, which means my trade has grown 92%. And the money that I've earned in this trade that I will win if I close it right here, which I probably will, is $32.50. I took in 35. If I buy it to close it, I'm going to keep $32.50. That's what happens when you're a seller, right? This percentage is important. Here lets you know that I've got a positive 92% on this trade. Looking at EOSE as shares. This is an opposite thing because we bought shares. And you want when you buy something, I bought it for $2.19. That was how much I paid, $2.19 per share. They are now currently worth $4.56. Okay, I bought them for $2.19. The current worth, the mark is the current value. They're worth $4.56. They have grown 108%, and they have grown $237. I have 100 shares. I bought them at $2.19. They're now worth $4.56. You take the difference between these two and multiply times 100, and that's how much the trade is. These shares are now worth 200. They've grown $237. Right? All right, that makes sense. So if you're buying something, you want the number between the trade and the mark to increase. If you're buying it, you want the money to go up. When you're selling something, you want the mark to be lower than the trade price. You want the mark to be lower. But notice here, it shows you on the percentage that I've won. I'm at a plus 92%. Hey, Miss Barbara, I made a plus 92%. But let's look up here at the credit spread, because the put credit spread. I talked about selling a put and buying these shares, but for a spread, you're going to need to take the difference. First thing you got to do is take the difference between these two pieces of money. The 98 minus 66 was that $32. $32 is what I took in, was $32. Now the difference between these two is, 19.5 minus 11.5 is $8.08. I took in $32. It's now worth $8. Right? It'll tell you here at the top of this Amazon line, it'll tell you that this trade is up 75%. On this Amazon line, this trade is up 75%, or $24 is my profit. I have profited $24 currently on this trade. I took in 32. It's now worth 8. The difference between those two is $24. If I close this trade right now, I will have $24 of profit. All right. The trade price. I want to make sure that you understand these columns. Now, this is just for Thinkorswim. When you look on Robinhood, Robinhood shows it a little bit different. Hey, Cynthia and Saida, how y'all doing? When you look on Robinhood, Robinhood gives you a plus or minus thing. It looks a little bit different for those of you who are still using Robinhood. And Robinhood, in my opinion, is very straightforward in what your stuff is worth. It's very straightforward in that. So it's much more easy to understand. Here it's not. You have to know that the trade price is what you paid or received, that the mark is the current value or the current worth of your trade. And then you've got your profit and loss percentage, like how's your trade going? And the profit and loss, this is the money column. This is the dollars. And if the way this 24 came about was 78.50 minus the 54. See how the 54 is in parentheses? 54 in parentheses, that is how much, that is the negative amount of money. 78.50 minus the 54.50 gives us the $24 right here. $24. You want the non-parentheses money. You want the non-parentheses money to be bigger than the parentheses money, right? So let's look down here at the open trade. This is open. I had 100 shares here. We sold a covered call. This is a covered call trade. The shares of open were purchased at $2.96, and they're now worth $4.84. So this is the share, what the worth of the shares is. I did a covered call. At 16 cents, right? $16. But because the price, I have a 3.5 strike, but because the price is way past 3.5, the covered call trade, now see how this number is so much bigger here, and I'm at a negative 756% because it started with $16. Well, the covered call, the plan with the covered call, but don't get excited about this. I bought these shares here for $2.96 with the plan of doing covered calls on them, on the shares. So you pick a strike above your covered call, what you paid for the share, you pick a strike above that. So if the price goes up through there, when this is all over the 21st, which is another week, the broker is going to pay me $3.50 per share. right? So I'm going to make $350 when I only paid $296 for them. So even though this trade itself has gone bad, it's doing what it needs to do for me because I bought these shares with the plan of doing a covered call above what I paid for them. And if the price goes through that strike, then I could then just lose them or release them at 350. This means I'm going to make $50 if I do it this way. The other thing, though, you see here, the overall trade of both of these things is now worth $67. So then you think, whew, do I just want to get rid of it all for $67, or do I wait and let these shares be relinquished for $350 and then I make $50? If I release it now for $67, the broker will give me my shares plus my $67 and I'll be in good shape. Actually, won't give me my shares. The shares will be called away, but I'll get my $67. Okay, let's look at space. Last one that's on here. We've got shares here. This will be the shares were purchased at $4 a piece. I bought 100 shares at $4. The current price of those shares is $3.85. This is the Virgin Galactic, right? $3.86. I sold a put on this as well. So I've got these 100 shares. I could actually do a covered call on these 100 shares because there's no covered call here right now. I could do a covered call above $4 and that would provide some premiums and potentially provide a release for a higher amount of the shares, even though they're not above $3.85 right now. So I also sold a put on space, basically saying as long as price stays above $3.50, I collected $36 in premiums when I did that. And this trade is currently worth $1, which as a seller, you do want the price to go down. You want the mark price to be smaller than your trade price, right? It shows here the P&L percentage is 95%. This trade has profited me 95% or $34.50. This is what it is in dollar bills. Dollar bills, yo, right? The P&L day, I don't know if this is a useful column to know what it did today. Not relevant. I kind of want to know overall. What is it doing? P&L open is what it's done overall. And the buying, this is BP effect, is buying power effect. This is the effect on your buying power that this trade is having. So if you close this trade off, then that's going to release this much buying power for you. All right. I hope I've made that real clear. We've got our stocks here, how many you have, how many days before expiration, if you've got an option. If you got shares, notice next to the shares, there's no days left because shares don't expire. You keep shares forever till you sell them. Options, on the other hand, do have expirations. Hey, Miss Peacock, how you doing? So the trade price is what you paid or what you received. The mark is the current worth of the trade. The profit or the loss percentage is clear, whether you in the plus or the minus. The profit or loss dollar amount is how much money you've come up with, right? If you're buying, you do want the mark to be higher than your trade price. If it's not higher, that means that's money you're losing. If you were buying, you want the mark to be higher than the trade price. If you're selling, you want the mark to be lower than your trade price. You want mark to be lower than your trade price. This is the difference between us buyers and us sellers. I coach sellers. I'm Arlissa. I coach sellers. I'm a seller's coach. I coach people as sellers, option sellers. Somebody's got to be on the seller side. Might as well be us. We're like the insurance company and we sell options. Yep. All right. So let's look real quick. Let's look real quick at a trade. Let me do my little piece in the middle. If you haven't subscribed to the YouTube channel, Please subscribe to the YouTube channel. Like and subscribe, like and share, pass the word, do all that stuff, right? Do all the things that all the YouTube people ask you to do. Please do that for me too. Do that for me too. If you're interested, you can join our Facebook group, Educator2Trader. If you go there and ask to be let in, we'll get you in as soon as we possibly can. We have a membership. I have a membership where we meet every morning. We do a pre-market call. We meet every other weekend on Saturday for coaching, which this coming weekend, we're going to talk about all the tools in our bag. What's in your bag is our topic. And I coach strategies that we're using. And when do you use these? When do you deploy your tools, right? That we do that. We also play a few games together. Second Saturday, we play Cash Flow 101 together. And we just overall have a general good community, a good supportive community where people trade together. There's an exclusive Telegram group. Everybody trades together and we hang out and make sure folks get the support they need because trading can be pretty lonely. All righty. We also have the Options 411 coming up July 18th and 19th. If you really want to know more about trading options and you need something that's more, step, which I totally get that, then join us on July 18th and 19th. You can go to Educator2Trader and get registered for that. For those of you who are SPX folks, maybe you purchased the SPX playbook already, but you've not been able to make it work for you. Because I got people who purchased the book and either haven't finished the strategy or they've not been able to get it to work for them. Every day I'm offering a training session on July 22nd. I think it's July 22nd. Yes, next Saturday. July 22nd. I want to say it's the 22nd. What is next Saturday? Yes, it's the 22nd. Got to make sure my calendar's right. So yes, on July 22nd, I'm offering that training session to help you make sure that we can answer whatever questions you have from that SPX playbook or the strategy, and we can get you on the right road to making your monties. All righty. That's all the things. All righty. Follow us on Instagram. Follow us on TikTok. Follow us. I don't really do a lot on Twitter, but I am there. Too many places. What do y'all think about that? Threads. No. I did check out Threads and I'm there, but I don't know how many. I can't scroll through too many more conversations. I'm so easily distracted as it is. So I haven't really spent a whole lot of time on Threads. I do like the fact that you can be conversational over there, that it's a conversant platform. I just don't have the time to be over there. I was going to say conversating, but it's really conversing. I always say conversating, but I say conversating just to make a joke because I do know it's called conversing, not conversating. Yes, I do know that. All right, let's look here to see what we got going. You said you were going to look at it. I'm looking at it right now, Miss Deborah. I've not forgotten. Looking at XSP. Let me change it. Thank you for bringing that up. XSP at the end of the day, just to see what kind of stuff. I think the premiums are up a little bit today because of the volatility that we're facing. If you're looking at this XSP, I really want you to be doing it in your sim. None of this is trading advice. I don't want anybody coming on later talking about, I lost my money. No, that happens, okay? Losing our money does happen. But I want you to try this in your sim before you get too comfortable going live and then you maybe weren't quite ready yet. All right, I want you to get ready first before you jump out there in the live. All righty, I want you to get yourself ready first. All right, so let's move. Let's see what we got for support and resistance. So what the first thing you should look at is what was our support and resistance for the day. And if we have any shorter time frame, shorter time frame resistances, you might want to look at that. So checking here, the high of the day has been 448.67. That's been the high of the day. You may want to look for something, a trade or the spread outside of the 448.67 and maybe below the 446.58. Now the price has been kind of don't really know. We're on a, if you want to say, I'm not sure if I'd call this an upward trend. It's been upward trending since 12 o'clock, since 11:45, 12 o'clock. It has been going up. That doesn't mean that it won't hit this resistance and come on back, or it won't hit this resistance and push on through, which is why you need to, I want you to get better involved with watching this versus don't just jump on because Arlissa said, no. Arlissa did say, but don't just jump on because of that. All right. I want you to know for yourself. Be very sure you want your anchor to hold and grip your solid rock and the rock that you understand. So above 448.67, which is probably 449 or higher, and below 446.58, which is like 446. So 449 or 446. Let's go to the trade screen and see what we see. 449 and look at 446. All right. I didn't look at any shorter time frames because I really just want you to be able to look on here, but I want you, if you're not comfortable charting or knowing what's happening on a chart, please go check the video of mine on my YouTube channel about charting support and resistance. We were talking about on the put side, what we say 446 was below us. Now the problem here, $1, right? If we go down to the farthest, to the lowest support, it's about $1 is what it's worth. No, that's not worth it. No, because you're going to pay $1.30 in fees. So you don't want to make $1 just to lose 30 cents. That's not how we do. So the 446, 445 put credit spread is not the best place to start off at this point. So let's just delete that. That's below today's support, but that's not a good trade for this time of day. Potentially more time passes, the price may come back towards it. It might become a better trade, but for right now, that ain't a good trade. All right. Let's go look at 449. 449 currently is paying $8 in credit. That's much better, right? So again, what we're looking for is places where you don't think price will come or will breach. You don't want price to overcome or to go into your 449, not and stay. So $8 credit is an 8% return on your money today. How do I get that? I took the $8, divide by the $100 of collateral you will be required to, the broker will block off. The broker will block off the amount, the difference between these two numbers. That's called the spread. That's what the broker is going to block off. So the broker is going to block off $1 or $100, and you're going to collect. I'm changing this to maybe a 10, maybe a 9 or a 10, because you can put a higher price in here. If the price comes towards it, then you get the price. If the price doesn't, then the trade doesn't feel, then you're okay with that. If you're okay with $8, which $8 is great. 8% return for an hour and a half worth of time. Not bad at all. You do want to pick a strike that you feel comfortable. The price will not be past it at expiration. Well, price right now is at 448.03. Now you got to say, do I think in the next hour and a half, the price is going to move another $1? It might, and it might not. Okay, I'm going to push confirm and send here just so we can, put that trade in. But I want to switch over to the single screen because I want to talk to you about Delta again, like we talked about it yesterday. Oh, it seemed to like that $8, but the sim always picks up fast. Looking at Delta, we talked about we want to get strikes that are less than 16 Delta. Y'all remember that discussion we had yesterday? Those of you who were here, less than 16 Delta, 447. Well, I think we looked at 446. 447 puts us at less than a 16 Delta right here, if I see my mouse. And less than a 16 Delta over here puts us at the 450. That 449 put us at the 19 Delta. That's a little more risky. But a 19 Delta, what that's saying is there's a 19% chance the price will come to this place by expiration, that it will be here at expiration. But there's an 81% chance it won't be here. 81% really isn't bad odds, to be honest, right? 19% chance it will be here. 81% chance it won't. 81% chance is good chances. Over here, we've got the 447, 15% chance it'll be down at 447 at expiration, which means there's an 85% chance, 84.9 profit OTM. 84% chance it won't be down here. So we picked 446. Let's go back to 447. Go back and see what that 447 trade. I'm picking 447 on the put side. See what that trade looks like. We would collect $6. We collected $8 on the other side. If we can go here and collect $7 on this side, the 8 and the 7 gives us $15 total in the iron condor. Now, iron condors is a little bit of an advanced thing. Doing a put credit spread and a call credit spread together is called an iron condor. I put the trade in. Many times people pick a side, pick one side, and do what you want to do. The way you can do, let's say we took in $8 on the call credit spread side. If $8 doesn't suit you, then you do multiple contracts. If you want 16 or 24 or 32 or $40, you just do more contracts. Every contract you do does use more collateral, but you can take in more premiums. All righty. That's what's going on with that. All righty. Who's got questions? Anybody got any questions they want to ask? If I don't mention the question things in the chat, y'all feel free to ask questions. Even if I don't mention it when I'm talking along, if I don't say, who's got questions? Just put your questions in the chat. All righty. Just put your questions there every single day. Any single day. All righty. Remember, I'm Arlissa, Educator to Trader, and I'm here every afternoon for our 2 o'clock live. 2 o'clock live. I need one of y'all to come with me a song. I really do. Somebody who's got some musical genius. Come with us a little ditty, a little tune. All right. Join me on YouTube. Y'all give me some likes and shares and all those good things. But we do 2 things in this community. 2 things. We stay green and we get this money. All right. I'll see you all later. Bye, everybody.